Welcome to Stock Market Funding because we're here gathered right now to pre-market at 6:14 a.m. Pacific Standard Time. Trade management is going to do certain things. Novartis is gapping up from 55.83 to 60. Here is the Nasdaq. Joy Global. There's news tattooed on that one. You got First Solar off of its earnings and upgrades during this triple witch options expiration. Beaten down Deckers finally got on the gap list. Lulu got on the gap list again. Take a look at that DECK trade. Once it pulls back, once they short the gaps, these are all price ratio gaps, but they're diminished. Not like it's been in the last 7 days. Today being day 8 MMTs. And just like when people are understanding the gap open and the gap down, we're in a triple witch. And just on the other side of things here, when we look at the gap down list, relative to a very weak futures market, Hang Seng, things across the world were selling off as well because they were. And we can take a look in here that the stocks that are gapping down are gapping down. And we got MAXY, that's the biggest one. Google down 99 cents, GOLD, so Google's down 86 pennies. We're going to be watching trading that Google off of that lower price action. We like owning that Google, but remember, part of our analysis is that there's a lot of headwinds going on around the world. And MMTs, you've already been updated in your emails. You know what that is. The diminishing gaps is always a positive during a triple witch options expiration. Price action volatility is going to be progressively picking up. We are going to hit the midday of the range, which is 2.5 days of the actual options expiration. And price actions, we're going to look at how they bounce, but 7 days in a row. Equities, as they're making their multi-highs and indexes making their multi-highs, they keep having a distribution and short sellers hitting that tape, and the pullbacks are much greater in price action. And what we have been looking for is a diminishing pullback, and that the names that make the breakouts instead of selling off, but the pullback is diminished in price. And we have yet to see that for 7 straight trading days in a row. So every time they put the highs in up there intraday, they've been getting those shorts. And then throughout the day in the SMF trading platform, you can see the ratios were weak. If the ratios are weak, then that means that you keep the shorts. There's wiggles and jiggles and everything, but you're getting those $3 or $4 moves off the highs. And what we're looking for, where is it when the price action pulls back shallow 369, holds and breaks higher, and that the upper end of the price ranges, when they do break, you're executing short right on a dime. So that way you're getting paid on the short side of the market, MMTs. There's a lot going around the world with Spain, Greece, you name it, rioting. We got the votes coming out. Everyone is putting a negative spin on Obama finally getting sense and doing the tax cuts. And, you know, Wall Street likes to take the negatives. But what we do here at SMF, it's all about the price action. That's what it's about. So when they start to break the higher end of the ranges, it's time to execute short. Make your money. Have a good trading day.